It's about that time of day again. My name is Joseph. Wednesday evening, December 13th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro this evening. Crude is bearish and rotating inside a channel, but the big clue is this measured move, telling me exactly where and where not to be looking for selling opportunities tomorrow morning. The S&P is bullish with a big flag pattern, got a spike in range as well on the S&P tonight. That tells me I'm looking for buying opportunities with seller failures down to the low of that channel. Nasdaq is also bullish. It's got its own spike in range pattern as well, telling me to look for buying opportunities using that 2-try rule below the range tomorrow morning. And of course, don't forget about gold. The yellow metal is bullish, and I'm watching a hidden support trend line to buy pullbacks tomorrow. And of course, the euro also bullish in the wake of this FOMC announcement this afternoon. Got a strong run to finish today's session, and I'm looking for a two-legged pullback to buy down at support on the euro tomorrow. I got a great newsletter in store for you guys and gals tonight. Before we jump into those charts, though, I want to remind you, if you're on our YouTube channel right now, make sure you subscribe to the video. Give it a thumbs up if you find value in this content. Don't forget to share this with a friend. And if you really want to stay in tune with everything that is SOT, dig into the description of that YouTube video. Follow that link over here to sidewaysmarkets.com. Head on over to the trading blog at Sideways Markets. And while you're here, don't forget, join the mailing list. I'll send you an email every evening. Our nightly newsletter goes live. Lower left-hand corner, follow me on social. I'm always posting important charts, links, and updates on my many different social media channels. Speaking of charts, how easy is that? All the charts from tonight's video, you can have them on your computer ready for tomorrow. Follow that link right below the video here that says click here to download today's charts. And speaking of tomorrow, what are you waiting for? Grab that free pass, upper right-hand corner. If you're not an advanced member here at schooloftrade.com, what are you waiting for? Grab that free pass and come out and join me as a guest in the trade room. And if you have any questions along the way, please don't hesitate. I'm always here. You can use that live support tool on the right-hand side, right? All questions, welcome, welcome, welcome. All right, let's keep moving here. Big day tomorrow. Tomorrow, Thursday, December the 14th. What do we have here? Boy, we got quite a bit. There are lots of red dots on this screen here right now. First of all, looking at tonight, we do have some news coming out of China here in the overnight session, 9 o'clock right this evening. We'll see big news from China, so be aware of that if you're trading the overnight Asian session. We're also probably going to see a lot of traders taking positions after the FOMC announcement of the rate hike this afternoon. We also heard from our President Trump here in the United States about the tax cuts coming here as well. So tomorrow, we'll just say the overnight into London, into the early part of tomorrow, really has potential to be quite a moving event. So very excited for this next 24 hours, and I'm looking forward to seeing you guys tomorrow in the trade room with me. Speaking of tomorrow, we got a lot of news tomorrow on the calendar. You'll notice we got the 3 a.m., 3:30 a.m., 4 a.m., 4:30, 7, right? Jeez Louise, lots of news tomorrow morning. 3 o'clock, 3:30, 4 o'clock, 4:30. And then, of course, we're going to cap off all the London session news with really the big news tomorrow of the London session, which is that BOE announcement followed by the ECB announcement. This will be a nice little 1-2 punch. They're always talking about Brexit, right? Brexit's on everyone's minds right now, so look for that around 7 o'clock. And, of course, you got the ECB at 7:45 Eastern time tomorrow. So a great little 1-2 punch just before we open up the trade room at 8 o'clock Eastern time, and then we roll right into jobless claims and retail sales tomorrow morning. Ooh, I can't wait to get my hands on that retail sales number tomorrow morning at 8:30 a.m. Eastern time. We're not done yet. No, there's still more. 9:45, just before the 10 o'clock shock, right? We got that PMI composite flash at 9:45 a.m. Eastern time. There's a lot going on. Again, in the wake of all the news about tax cuts, in the wake of the rate hike, right, from the FOMC announcement, I am expecting, combine that with some news out of China, I'm expecting to be a relatively active overnight Asian session. Peppering of news tomorrow morning before we start up in the U.S., right? We've got, of course, that ECB announcement and the BOE announcement at 7 o'clock and 7:45s, right? So keep that on your radar. Deep breath here, Joe. And of course, if you're with me tomorrow at 8 o'clock Eastern time, how are we still going over this, right? There's so much to cover here. Tomorrow morning, opening up at 8 o'clock Eastern time, we got that Jobless claims and retail sales, big number tomorrow, of course, will be that retail sales number. Jobless claims is never that important, right? Retail sales, and of course, the PMI composite at 9:45. Don't forget Friday. Friday is the quad witching, right? Friday is the third Friday of every 3 months. That means tomorrow probably going to be the last full day of the week, right? We'll probably get it from start to finish tomorrow, but be aware, tomorrow afternoon, you know what I always say, whenever Friday's got some big news, Thursday afternoon tends to be a little bit less reliable, so keep your finger on the pulse tomorrow afternoon if you're trading after 2 o'clock, 2:30 Eastern time. Now, one kind of good, maybe bad announcement is tomorrow evening will be my final newsletter of the year 2017. I don't even know how to react to it. This year has been so amazing. We've gone by so quickly. It's that time of the year again. You know, we're going into, of course, Hanukkah started last night, right? Happy Hanukkah to everyone who celebrates out there. We're going to be, Hanukkah will take us into next week, right? And of course, we'll start shopping for Christmas presents. And of course, if you're a small business owner like I am, you've got end of the year stuff that you've got to get done. So last newsletter tomorrow evening. I might shed a little bit of a tear here this evening talking about it. I'll save that. I'll save that for tomorrow night's newsletter. But just to give you guys and gals, just to give you animals a heads up, right? Tomorrow evening will be the final newsletter of 2017. I'm going to come back. I swear I'll come back. I'll come back in early January. The way this month is laid out, it's going to be an early finish to December, and then we are right back January 2nd. So you better not have too much fun on New Year's, because Tuesday, January 2nd, we are right back in the action. Right, I'll be back. My next newsletter, right, will be that Tuesday evening, January the 2nd. We'll talk more about that tomorrow. I'm getting ahead of myself, but I do want to make sure, just in case you want to work your vacation plans around my, I'm kidding with you. All right, so big day tomorrow. Relatively active day we're expecting, because we got a lot of news on the calendar. And again, last newsletter, final newsletter for the year 2017 is going to be tomorrow. I can't even believe it. All right, save the emotions for next time. Let's get into these charts tonight. We got Crude, S&P, Nasdaq. How about some gold and some euro as well? I think we should. Let's jump in first tonight with Crude. Crude is obviously bearish. What a beautiful failure off that moving average we talked about from last night's newsletter. Crude is bearish and trading at the measured move target, which tells me to look for selling opportunities using a two-legged pullback up in the battle zone tomorrow morning. You know, the most important thing right now is we've got beautiful channel rotation. Couple things here in the chart right now. Beautiful channel rotation, low to high, high to low, low to high, high to low, low to high. It doesn't get much better than that. The one thing that does stand out to me is the fact that we have 1, 2, 3 touches right on each side. That means this is a relatively seasoned channel, right? That also tells me a lot of sellers are probably already either in this move or they're waiting for a move up so they can resell it and get back down again. Small, or should I say seasoned channels, right? A channel with a bunch of tests on each side, right? Eventually, these technical analysis tools, they break down, right? After a level of resistance gets hit 2 or 3 times, it usually starts to break down, right? In my trade room, we call this first channel test, second channel test. If you're a client of mine, you know what we're looking for now, right? Looking for that two-legged pullback up into a battle zone, right? And then back down we go. So that's a big clue here for tomorrow. Those seasoned channels, right? They don't last forever. Well, that S&P channel almost did, though. We'll go with that in a second. But expecting to see a pullback and a retest of that high. So channel tells me up and then back down, right, to retest that low. Pretty much exactly like we saw that channel from yesterday, right? Remember that channel from yesterday, right? Two-legged pullback, back down to retest low. Nothing is different. This is the same exact strategy we talked about, right, in last night's newsletter. The second big clue here is the measured move. Now, measured moves are really great. They're simple, they're easy. You know, that's why they work so well. You know, technical analysis, the best forms of technical analysis are easy for the majority of people to see them. Every different type of trader in the market can see you take this leg down, You project it down, and there's a measured move, right? No complicated algorithms, no complicated calculations, right? Is it a 1272? Is it a 1618? None of that stuff works, right? As well as a simple 100%, right, measured move, symmetrical extension. That's why I like to use them. I get questions all the time about why don't I use Fibonacci ratios? Because they're not reliable. It's as simple as that. The only way I can rely on a Fibonacci calculation is if it's combined with something else. And when I have to do all that extra legwork, I wonder, why do I even need the Fibonacci calculation at that point, right? Why not use the something else, right? Which is what we do with our battle zone. So to make a long story short, right, measured move is a great target. And you can see, right, that we've got a lot of people taking their profit. The sellers tried to come in and sell through it. They're not getting very far with that. And that's great because now we can look for that two-legged pullback, right, and then look for that move back down. One of the most common situations we see when we get a measured move is a bounce. Bounce up. Bears come in, they sell, right? And we run back down, right, to retest that measured move. We did get a little bit of a bounce, but this really isn't enough of a bounce that I'm referring to. I'm talking about a big old two-legged bounce, right, and then back down in. The third clue, right, it looks like we might have grabbed the wick, right? Grab the wick, right? We might have a trading range going here. That is also very common, right? We have a strong trend down here for today, right? Not everybody's taking their profit. Nobody's buying it, right? Which is the reason why it's not moving higher right now. So the channel tells me up and back down. The measured move tells me two legs up and then back down. The range here tells me keep an eye out for that rotation tomorrow, and then we'll trade, right, that range accordingly. What if price goes up? What if price goes down? What if price goes sideways? Let's get on it, right? Price goes up. I'm looking for that. There's a bunch of different ways we can do this, right? Price goes up, moving average comes over, buyer failure, and back down. That's one option. Maybe we draw a little trend line up here, use that trend line as support, up, trend line acts as resistance, right, back down, moving average failure, right, back down, simple as that, right? So looking at up and then back down from there, up above at the very least, right, up above this 91, right? Really, I'd like to get up around that battle zone between 19 there and, right, and the 04. That would be ideal. Get it up, right, so we can bring it back down. What if price goes sideways? Well, that's why I have that trading range. If price goes sideways here, and we saw a great example of this today on the Nasdaq, if price goes sideways, we treat it as a trading range. What do we always talk about for trading ranges? Breakout failures, 2-try rule, right? 1 try, 2 try, and then back down in. Buyer failures up above the top of that range. How else can we trade a range? Breakout of the downside. So let's just say, for example, we get the trading range, right? We get it up. We get the failure, we break down, then what do we need? Moving average has to come over, right? Moving average has to come over, and then we can grab that move through that low, right? That'll be the key tomorrow. Get that move through the low. That way we can really show proof these bears want more, right? I don't want to fall victim to doing one of these, right? Trying to sell the pullback like this, right? And getting stopped out just because I'm foolishly buying the low of that, right? Or selling, right, the low of that trading range. I really want to get that moving average. I want to see a strong move down, get that moving average through. Then I can sell with confidence using that prior support area as a level of resistance. Does that make sense? Right? So don't try to sell it unless we really get a clear breakdown. I want to see proof, and proof requires, at least in my opinion, to get that moving average down below that low. Now, we got price if it goes up, we got price if it goes down, we got price if it goes sideways. What if we turn bullish tomorrow? How would we turn bullish tomorrow? 3 things, right? Strength, pullback, strength. It was a good example here today, right? Because we had that strong move up. Boy, the buyers, they tried it, didn't they, right? They couldn't hold it, and it sunk right back down in, right? If the buyers could have held that pullback, right, and we talked about this morning in the trade room, if the buyers could hold that pullback, this would have been a bull market. But it didn't hold the pullback. You can see a big wicks up there. We watched as it collapsed right back down in. Bottom line, though, is strength. First thing, moving average test. Second thing, third thing, strength, right? just like we saw earlier today, we've got to see it push through, right? It's got to push through and really run higher. If it does, then we know we have the green light to be a buyer, right? So I never try to predict a reversal. I think predicting reversals is a fool's game, right? I have tirelessly tried to find reliable. The key word's reliable. I mean, you can fall asleep at your computer, hit the right button at the right time, and get a winner off a reversal. But I'm talking about, can you find me a pattern that is 75 to 80% reliable, right? That doesn't require a ton of risk, right? Or to take 5 or 6 losses before you get that winner, right? You know what I'm talking about. It's difficult to call tops and bottoms because you'll die a death of 1,000 little losses before finally one takes off. And not many human beings are going to take the 6th trade when they've had 5 previous losses. If you're an experienced trader, you know what I'm talking about. So I like to wait for the reversal and then look for, right, and then look for that pullback right from there. You know, today's a good example, right? You wait for that big drop off the high, then look for that trap high, right, and sell it back from there. I mean, literally, here's what I think about it. Here's what I've seen in my experience. You could try to predict that reversal right there, or you could just wait for it, and it will usually come almost right back to where you would have gotten in before. The markets are so sinister like that, right? You try to trade the breakout, you get stopped out. You wait for the collapse, then wait for that little two-legged pullback, and you're going to be able to sell, in this case, right? You would sell pretty much the exact same location you would have sold, right? Just by trying to predict the breakout, predict the reversal. So I always like to wait for the reversal, wait for proof. I know I'm a conservative trader, but I like to have high winning percentages, right? I don't want my winning percentage to be down 55, 60% because it's difficult to be confident, right, when your numbers aren't where you need them to be. We'll go into more detail on that tomorrow morning. Again, trade room, 8 o'clock Eastern time, right, and we'll trade the plan together. How about the S&P? S&P is a little bit tough tonight. S&P is a little bit difficult. We've got a couple key patterns here. S&P is definitely bullish. We're not bearish yet, right? Yet. This falling resistance, though, may give those bears a good opportunity for tomorrow. We are bullish, though. Spike and range pattern and flag pattern. Both of those tell me to look for buying opportunities with seller failures. Okay, the range says look for seller failures below the range. Okay, the flag pattern says look for this second attempt down around this channel. So this is going to be a little bit tricky here. Obviously, we had the bulls. They pulled back into that battle zone from last night's newsletter. You guys ready for that? Strong move up. What happens when we see a strong move higher? We see a two-legged pullback. Back to what? Back to support and a retest of that high, right? Pretty much classic, right? We talk about this pretty much every night on this newsletter. As you can see, though, what happened, right? Were they able to retest the high? No, they weren't, right? They tried once to do it. They tried twice to do it. And they came very close, right? But they couldn't retest the high. Anytime they can't retest the high, now we have to go out, draw that trend line down. Okay, once I have that trend line down, now take it down bottom here, put it down bottom, right? And that's usually where you can actually anticipate these buying opportunities. Once you have this high, you can draw that trend line. You can bring it down to that low, and you know ahead of time where those buyers are going to come in there, right? So that's why you see so many buyers waiting there with those big green candles, because it's telegraphed, right? This is not a very difficult pattern. The key is once you see that failure at the highs, right? That's the worst strong I've ever done, right? Once you see those lower highs, then bring it on, right? Bring it back down, right? And just wait for that buy off of that low on a faster time frame. This is the 2-try rule on the entry time frame, right? And back up we go from there. So that's the flag, right? So you take that, right? That's the flag. So the key to a flag is you want to look for buying opportunities as close to the low of this channel, right? So down buying opportunities as close to the low of that channel. Now sometimes you can get a flag pattern. Draw this out real quickly here. Sometimes you'll have a flag pattern where it pulls back so far that you can actually buy on the way back up as well, right? So these are the two areas of interest here. We have a great opportunity on the S&P below the low of that channel. That's relatively easy. But when you look at the chart, this is really tight, right? It's really tight. There's not a lot of space up here because we also have a measured move up here as well, right? So back to our chart right now, right? This area right there, that's going to be the variable for tomorrow, right? It has a lot to do with when we get there. You know, obviously, if we get back above it here and we try to do this, that doesn't nearly look as attractive than if it goes down, right, and then up and does that, right? See the big difference there? That's a lot better entry because now you've got space to go back up and retest the high. So the flag pattern, always one of the most challenging. Okay, I'm giving you a forewarning right now. Flag patterns, the psychology of the market, half the market thinks we're going down because of this lower high, right, lower low. The other half of the market says, sweet, get this price lower, I want to buy, right? So it tends to be a real chippy, choppy environment. And the hardest part about trading flags, at least in my experience, is having the cojones, right, to buy down around that low. It just feels like you're doing it wrong because it's a bear channel. But remember, how do we turn bearish? Strength, pullback, strength, right? It's got to show us some strength going lower here. Now, if it just torches going lower, right, the bottom falls out of it, then you know what the deal is, right? We're bearish. But if this thing just kind of grinds down here, right, and then finally we get that failure, right, that's a buy off of the low of that channel, or that flag, right, as we call it, right, which is what this referred to in most of the old school trading books. So that's what makes flag patterns, right, so difficult. You're looking for that buy off the low. In most flag patterns, you're going to get a move through the low, and then it will kind of come back up and hold. When you see that, jump on it, right? It kind of overshoots the low of it, and when it does that, it opens up. Because remember, the biggest challenge for buyers here is that falling resistance trend line. Now, this is easier than most flags because it's so wide, right? A lot of times flags are a lot narrower, and so you can't really get in with much space there. So we're really trying to get below that low. And again, do we get above that channel here, right? Or do we get it up here? You know, those are two very different scenarios. The first one is way too close to that resistance. I don't want that one, right? I do want that second one, right, as it goes overhead. That, in my opinion, that's really the big ticket for tomorrow. We're bullish. We're definitely going range bound, 1 try, 2 try, back into the range. I like that. It's just the problem is I have this trend line, right? And this trend line is just, it's thumbing its nose at those buyers saying, I dare you, right? I dare you to try to buy this. What really happens is when there's falling resistance, buyers aren't going to want to buy into it. So the price will naturally pull back because of the lack of demand. So what I want to do here is I want to try to get this. If you do want to take that failure, look to really, what I would do is look for the failure and then try to get a limit order in here to buy it a little bit lower, right? That way you're not trying to buy into that level of resistance. So that's the tough part here as we buy as the market, right, goes lower. As we go higher here, right, going lower is relatively easy. As we go higher here, watch out for that falling resistance. We got to get above it and then use it, right, as support. It's going to be tough, you know, until we can really clear, and this could easily happen tomorrow. We get a bunch of news tomorrow. Until we really clear above that high, that measured move, in my opinion, is really going to be the line in the sand tomorrow. You're going to see that's, I think, what everyone was dealing with today. If we can get above that measured move, then we're good to go, right? Then we're good to go. But until then, again, like I said earlier, right, we're going to have this, right? We're going to have this little issue up here where we're trying to buy into the high. We want to buy with traps, right? So if we do get up, really trap low, get it as far away from that high as you possibly can. So not easy, right? Like I said, definitely a challenging environment there. Price goes up, we know we're battling there. Price goes down, we know we're battling there. What if price goes sideways? If price goes sideways, you're not worried too much. Not much changes. We still want to see that 2-try rule down in the battle zone, right, for tomorrow there. If it goes higher, again, you know, we still we have that falling resistance. You know, that's the challenge. So if it does try to go up, you can try to, you know, just again, try to be as aware of where that resistance is and try not to buy into it. How do we turn bearish? we could definitely turn bearish. That's one of the things about a flag pattern. Flag patterns are only a small push, right, to turn the opposite direction. What happens most of the time on a flag that fails would be we go through it and we hold, right? We kind of get below it and we hold. Once we see them hold there, then that'll be your clue, right? There's your new channel, and we're looking for that sell, right, back up from there. So look for it to get through it, hold it. You know, this support will act as resistance usually, and usually it drops pretty quickly when a flag pattern falls apart. There's a big candlestick here, and those big candlesticks oftentimes act as a vacuum. So don't be surprised if we end up holding and then literally right back down to that low. If that's the case, you focus on using these levels of resistance, right, and then sell high right down there. The moral of the story is don't try to chase it as it moves lower. As we've talked about many times already in this newsletter, right, I don't want to try chasing that thing after it collapses like I talked about today. Wait for it to pull back. It'll almost always pull back and give you a chance for a trap high there and a sell back down. Again, not going to be that easy on the S&P tomorrow. Hopefully this news we have scheduled for tomorrow morning, right, the other day tomorrow, hopefully that will kind of shake things out and get things, either above or below that flag pattern and make it relatively easier for us. Over the Nasdaq. Nasdaq is pretty simple. It's rather lifeless here right now. Had a great session today in the trade room on the Nasdaq. Nasdaq is bullish. Another spike in range pattern. This thing loves those ranges right now. It basically tells us to keep buying the low, keep selling the high, keep avoiding the middle, and keep focusing on failures tomorrow morning. Almost identical to what we saw yesterday. Was it yesterday morning? Yeah. It was last night's newsletter. Strong move up, right? Obviously pulling back, trying to retest the high. They fail. That causes falling resistance, right? The bears clearly tried here coming off that high, but they couldn't hold it, right, and run it higher, right? They go back, they try it again now. Can't get through the highs again. This now was one try, two try. Buyers tried twice. Now we have rising support, falling resistance. Moving average is somewhat flat. And of course, you can definitely tell when I add the midline in there, right? You can see that midline right in the middle acting as support and resistance. So this is definitely a trading range environment. We're not making new higher highs. We're also not making new lower lows, but we do have that strong move higher there that's going to give us that bull bias. Now, whether it's a triangle or it's a trading range, I'm always going to focus on failures, right? So seller failure, one try, two try, and back up. Buyer failure, one try and two try, back down. There is a bull bias right now, so as you saw today, it was difficult to get the market to tumble off the highs, right? It was easy to buy off the low today. It wasn't very easy to sell off the high. That was because of the bull bias, right, that we saw in that move going higher here. So there is a bull bias, which means I would much rather be buying down below this trading range than trying to sell up above it for tomorrow. So make a mental note or write that down for your trading plan for tomorrow. Let's see here. What else? Rotation is very important. High to low, low to high, high to low, low to high. We should be going back up to that high, right? So if we do get a chance here, one try, two try, and back up we go from there. Most important thing about a triangle pattern is to look at the extremes. That's why that's the battle zone. Look at the extremes. That's why that's the battle zone. And one of the more challenging aspects of a triangle is to stay away from the middle. You'll notice the middle oftentimes is the sloppiest of all of the areas on that chart, right? So really focusing on getting nice and low. Let those bears try to run this thing out. It's just like we saw right here, right? Let those bears take it down. Wait for them to come up, two try. Once we see that second try failing, we'll be a buyer going back up. One try, two try, back up into that range. I'm also taking that trend line off the high, bringing it down to that low, just kind of, identifying some additional levels of support that we can use. Again, one try, two try, right? And then back up we go from there. What else do we have here? Long measured move, long-term measured move, right? Prior month high, of course, will be a target before we get there to that measured move up there at 61.5. Really right now, stay away from the middle, buy the low, sell that high. Again, bull bias right? So stick to the buy side if you want the most reliable opportunities. And how do we break out? What does a breakout look like on these types of environments? Well, we talk about the 2-try rule for failures. The 2-try rule will also apply for a successful breakout. So for example, right, we run higher, we pull back, 1 try, 2 try, and that second try keeps on going. Bingo, right? There's your breakout. Now we'll go out, we'll connect the dots, draw that trend line. And again, rather than trying to trade the breakout, right, I always just wait for that, pull back and buy it from there. Same thing, right? 1 try, 2 try, right? It runs, draw that trend line down, find that new channel, right? And then of course, from there, wait for it, right? Wait to sell as the market pulls off of that low. That'll give you a much better entry. And again, you're just not chasing the market as it runs without you, right? Chasing things don't usually result, right, or don't usually produce the best result here. Spike in range, triangle, get that hidden level support down there, stay away from the middle. Yeah, tomorrow is going to be all about patience if we're in the middle tomorrow, so be aware of that. Hopefully that big news tomorrow will shake things up. Again, prior month high overhead is a target for the buyers. If we can break out, big measured move target, 61.5, right? But we'll deal with that prior month high, right, first and forehand tomorrow. Let's keep going. How about some gold? The yellow metal is just a little bullish with a strong bull trend today. And my plan for tomorrow is to look for buying opportunities using this rising support trend line down in the battle zone. Really, at this point, I think there are basically 3 big clues on this chart. The first clue is the obvious, right? This rising trend line. I'm not a huge fan of using yesterday's information, right? But sometimes it just fits so well. Like this one fits really well. You can see they're bouncing right off of that trend line. So, sorry about that. This trend line will definitely be a great support level there, right? If we get the opportunity to use it. What else do we have here? The move going higher. This is an example where there was originally a channel here, right? But you'll notice they broke through and kept on going. Once they held above the top of that channel, right? Once they break out, pull back and go. Once they hold top of that channel, you know you've probably got the wrong channel. So in those situations where we're reacting to big news, it was the FOMC announcement this afternoon, take those channel highs, bring them down to that low, and that's probably going to be a key support level there for tomorrow, right? Those will be the second big component on this chart tonight. The third big component is right there. This, of course, is that kind of FOMC announcement reaction, right? Goes up, goes down, goes back up. That area right there really is my sweet spot tomorrow for that pullback. You know, think of it this way. A lot of buyers a lot of wise traders who didn't participate in the FOMC announcement for good darn reason because it's so unpredictable and it's so volatile, they're going to be waiting for a chance to get in where they could have been in earlier. So think about it this way. The psychology of this says traders are going to wait, sit on hands around that news event. When they see the news event come out, when they have the new bias after that news event comes out, right, a lot of them, if the price pulls back to the same area they could have gotten in before, they're going to look at this like a little gift from the trading gods, right? And they're going to buy that pullback there. So we have to assume there's a lot of buyers here who were, you know, either by choice or just by not having the ability to participate, they're not in this move, and that area becomes a really, again, it's all psychology, right? It's all psychology. It's like driving past the Mercedes dealership. You see a brand new Mercedes on the lot, right, for $35,000. You think, oh, that's way too much money. Right? Come back a week later, it's $55,000. You go, holy crap, what happened? Then you come back a week later, and now it's back to $35,000. What are you going to do? You're going to buy it, right? You're going to think, that's a deal now, right? And that's the psychology behind it, right? 35, 55, they better not be jumping at that much, but hopefully get the point, right? That's the psychology behind it, and it's just you know, human beings rationalizing their decision making. So the bottom line is this little area right there, that really could be kind of an additional battle zone for tomorrow. All right, so anytime we have a strong move higher, what's my plan? Two-legged pullback to an area of support and a retest of that high, right? So that's the plan for tomorrow. How we get that, that's the variable. We got a little bit of falling resistance, maybe go up, down and go from there, right? Maybe that's the entry for tomorrow. Hey, maybe it's something more dramatic or maybe more aggressive, right? Down, bears try to sell it. See, I like something like this because in this example, you get this rising support trend line, right? You can be more confident that failure into pullback, right, and go from there, right? You can buy that failure, right, buy that pullback from there as well. So using that trend line down in that area, right, we talked about earlier, that would really be the ideal. That's if price pulls back. What if price goes sideways? Big, strong move, right? This could easily go sideways. Wait till you see the euro. The euro is still going right now. It's still going, right? So it could go sideways here. You know, there's no guarantee this thing pulls back, right? So strong move up. Maybe nobody wants to take profit, but nobody wants to buy just yet, right? They're waiting for it too. Nobody wants to sell it because it's so darn bullish, right? So we start going sideways. What do we look for then? You got it, right? Pull back, 2-try rule. 1 try, 2 try. And again, we have the luxury of this rising support trend line here, which is nice because what it does is it prevents the sellers from really getting too aggressive. It helps the buyers by hurting the sellers, right? It's a bit of a preventative measure for those buyers. I have one of my favorite patterns, a bear channel failure, right, which we talk about in our advanced class in our trading each day, which really relies on setups like these. You know, where you're looking for an opportunity where the bulls have control and there's limited opportunity for the bears, right? The bears have something standing in their way that's easy to see, and you can use that to your advantage by going with that trend. What if price keeps going higher here? What if it goes higher, right? What if it keeps going higher like the euro's doing right now? This could start setting up here as a little spike in channel. Right? Now, what does spike in channel tell you? Yeah, spike in channel, nothing changes. If price goes higher, we're still starving for a pullback. I'm still starving here for a pullback. I'm not the guy. If you're looking for somebody right now to tell you to buy the high, I'm not that guy. I apologize. Okay, I'm sure there are plenty of other rookies out there doing YouTube videos these days, right, that will say to buy the high of everything, right, because it's bullish and it's going higher, so buy it. It's human nature to want to buy something that's rising higher. We have to stop thinking like humans and think like traders, right? We talk about this quite a bit on my psychology series on my YouTube channel, right? So if the price goes higher, I'm still waiting patiently for that pullback. I realize I want to trade. I do, trust me, but I want the money to grow in my account, right, not get smaller. If you want your account to grow, right, then stay patient, right? If you want your account to be fits and starts and have a really ugly equity curve, okay, go ahead and chase after trades as they go higher, especially after a big run to finish off today's session. Am I saying it has to go lower? Absolutely not. Right? These markets can remain irrational far longer, right, than I imagined. So this could easily keep going higher, and I could look like a fool for not buying high. But I'm talking about a long-term trading career. You're not going to trade just one day, right? You want to trade for decades. You want to have a long-term career. Get in the habit of buying pullbacks, right, rather than buying high. So that's if price goes higher here. What if we go lower? How do we turn? How do we turn bearish? Well, this trend line is really your go-to, right? We got to get below it, get the moving average below it, hold below it. That's going to be the key. Once we get that and we see those bears taking this sucker lower, yeah, no problem. Now we're bearish. Again, don't chase after it. Mark up those levels of resistance. Wait for that move to come back, right, because it usually does, and look for the run from there. Where's their objective? Their objective is back down to that 38.3. All right, I'm off my soapbox. Sorry for the rant on that one. I get a lot of interesting emails from non-clients, quite a bit here in this office in Los Angeles. I have seen everything twice. Believe me on that one. All right, Euro still running higher here. Euro is bullish with a strong move higher to finish today's session, which tells me that buyers will be eagerly waiting for buying opportunities using a two-legged pullback and a trap low for retest of the high tomorrow. Boy, not much is different between this and gold, right? It's very similar. The one thing, though, that's really big difference is look at the difference between this rising support trend line, right, and where we are right now. So that's the big difference. On gold, it'll be really difficult for gold to turn bearish before we get to that trend line. The euro could easily, maybe not easily, but it could go, right, and this could really look very bearish when it gets to that trend line. So it's got potential to be a real train wreck down there, right, when it's bearish running into that support level. That's the big difference there, right? We could also look for this and say this thing could really pull back far, which again would produce more of a bearish tone, but then you got to be careful and then wait for that strength up and back. Okay, so I'm going to go over that again. I'm gonna do that again a little bit slower next time. But that's the big difference, right? The big difference is the distance, right? Gold, you can be a little bit more confident on gold, right? Because there's not much space there. You know, you're not going to see a lot of bears that want to take a big chunk of a position right now. But on the euro, right, as foolish as it is, right, bears could look at this and go, oh yeah, we've gone too far. I'll sell this. Right? There's a lot of space down there. So the psychology of the marketplace is a little bit different here right now. Okay? And that will play into different scenarios, right, as we go. That's the big difference. The other big difference obviously is, right, we've got this, well, maybe not big difference here, but we are clearly rejecting the idea of this being a channel high, right? For whatever reason, apparently nobody told the bulls to stop buying at the high of that channel. So that tells me this is probably going to result in some sort of spike in channel, right? Spike in range, right? So on and so forth. So it's more extreme, right? This is more extreme on the euro than there is on gold. I also want to remind you too, we are watching rollover on the euro as of right now. Of course, I'm recording this in the overnight Asian session. Right now, volume is still higher on that 12.17 contract. Once the 3.18 contract is greater than the 12.17 contract, then, bada bing, we move over to the 3.18 contract, and we're there until mid to late March. So watch that rollover. It doesn't look like it's going to be for tomorrow, but you know, again, when the market is higher volume than 3.18, you roll forward right to that 3.18 contract. Okay. Big, strong move up. That's the key component here, right? Strong spike higher. I'm watching for basically, let's say basically 5 different scenarios here. One would be a trading range, right? Up, sideways, trading range, 1 try, 2 try, back down in. I know my battle zone is down here, again, because that was the FOMC. Remember what I said earlier on gold, right? Where that FOMC announcement was, that's my battle zone. Believe me, guys, I would absolutely love it if we get the price back down into this area tomorrow. That's the sweet spot, right? That's where buyers are parking their orders and waiting for that retest of the high. But the way it looks right now, though, don't hold your breath for that pullback down. First scenario, spike and range. 2 try rule, back up to retest the high. Second scenario, much like I talked about on gold earlier, get rid of this channel, right? And this becomes a spike and a new channel, right? New spiking channel. What do we do there? Look for traps, right? Look for traps. Trap low, buy back up from there, right? That's an easy one. What else? Possible flag pattern. Up, we pull back, can't move the tops, can't retest the tops, right? Flag pattern. We talked about this earlier on today. Get it low, right? Or get it above. This is a recap we talked about in the S&P, right? Possible flag pattern there for tomorrow. Or maybe we get absolutely lucky. Maybe the gods are watching over us tomorrow, right? And we get a beautiful 2-legged pullback right down into that, battle zone. Or maybe we see a test of that prior swing. Moving average comes up. W pattern, right, for a failure. Okay, lots of different ways in which we can find the entry if we can get that nice deep pullback. Again, like I mentioned earlier, this really is, right, that's really the sweet spot. I'm marking up the real battle zone here because of the FOMC announcement, right? So 2-legged pullback into support, that'd be great. Sideways range, right, trap low and back up. Possible spike and channel, trap low and back up, right? Or flag pattern, remember these are the tough ones, right? Overshoot, and then we go from there, right? So same type of scenario, just different market. How do we turn bearish? Here, this is the tough one, right? So we go lower, we hold it, right? Strong move down, we hold the pullback, we run. Yeah, see, this is going to be tough. We got that rising support trend line right there. It's not going to make for an easy job here for the bears. So I think we really got to get through it, hold it, and then go from there. If we can see the bears hold below that trend line and run, now we're talking prior week low, right? Prior week low is going to be the objective between that 17,350 area here. What I really want to be careful about tomorrow, though, is if we do collapse back down, what will usually happen is we'll start to go sideways, we'll start to balance out a little bit. If it turns bearish and we're at support, it's not a bull market anymore. I'm going to want to wait for a strong move up and then look for the move from there. What's the difference? The difference is if we turn bearish as we collapse, that's why I said it's a big difference. It's one of the key differences between gold and the euro right now. If we turn bearish as we collapse, then I can't just simply take the W pattern and buy it back up, right? Because it's not a bull market anymore, right? Does that make sense? So I'm going to skip the failure and wait for that strong move up. Show me some proof. Do not buy that move higher, because that's where sellers are going to come in and they're going to stop you out just to see it, right? Just to see it pull up and go. Right? So if it does collapse, that's why I mentioned earlier, it's a big difference. If it does collapse and turn bearish, you can't take the failure. You've got to wait for that strength and then grab it on the pullback. Don't sell it. Don't buy it high, right? Because sellers are going to be trying to trap high and sell it back down again, right? You're going to learn that lesson the hard way a few times if you don't listen closely on that, right? I can't even count how many times I've made that mistake. You know, it turns bullish. I can't resist it. I chase after it, and what does it do? It stops me out. Right when I get stopped out, the bulls come in and roar back up, right, to retest the high. Bottom line is, strong move up, two-legged pullback, retest the high. That's what we're looking for tomorrow. If we get it early, great. If we get it late, wait for it. Boy, oh boy, that time flies when we're having fun. It's already 45 minutes into this video. What are you doing still watching this video right now? I'm kidding with you. I'm kidding with you. YouTube always tells me I got to make my videos short, but you guys always impress me so much with your desire to learn, and I'm always so happy to share my knowledge with you guys here, to everybody here on my nightly newsletter. Don't forget, in the description of the YouTube video, if you haven't dug in there yet, there's links in that description of the YouTube video. Follow those links. Come here to the blog. Come here to the website at schooloftrade.com. While you're here, join our free trial. Hit me up with any questions you may have. Tomorrow morning, 8 o'clock Eastern time, I'm going to see you there, right? If not, I'll see you same time, same place tomorrow night, and we'll do it all again. The final newsletter of 2017, and the crowd goes, yeah, we'll save it for tomorrow, Joe. We'll see you guys tomorrow, same time, same place. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos.